to assess all of these figures is Tim Guinness, Chief Investment Officer at Guinness Atkinson, a fund that holds BP shares. Thank you very much indeed for joining us today. Dudley actually talked about how close BP was to break up last week, to a kind of disaster. Are we now firmly on the road to rebuilding its reputation?
I'd have said so. I mean, you said it all, but these results have been quite well received. The actual operating profits have exceeded expectations by a reasonable margin. And I think they're being conservative on the amount they're putting aside as additional provisions against Macondo.
Now, they do seem to have built up quite a nice little war chest there for Macondo. Does that mean it's more likely that they're going to bring back a dividend in the early part of next year, would you have thought?
I would be very surprised if they don't bring back a dividend next year. I think whether it's early on, who can tell?
Yeah. Now, you're very well renowned for someone who crunches all the numbers and takes a very close look at the intricate workings of companies to invest. You've said that there is quite a significant upside for BP. Would you still think that there is? Because the price has been fairly range-bound of late, hasn't it?
I think that it's staring you in the face that the market is putting a very cautious valuation on BP, and I don't think it deserves that. If you like, the implicit allowance in the current market capitalization of BP for the Macondo effect is, of the order of $80 billion. It's very hard to see how it's going to be anything like that.
I mean, people are actually saying that it's higher than they thought. There's now sort of $40 billion is what BP says that this may cost. Would you think that that price is likely to be about accurate now?
I'd be surprised if we weren't now getting to a reasonably firm figure. And I think in my view, is we might begin to see it go down. I don't see why they shouldn't claim some of these costs back from their partners.
As they start to spread the costs,
yes.
Indeed. What happens then, in terms, to put you on the spot a little bit, in terms of timing for a BP share price to actually rise? Because you and others that I talk to say, yeah, it's going to go up. It's definitely, there's a lot of value there. But when?
Andrea, that's a very unfair question, and you know it. But I will say one thing. Markets are anticipatory, so don't be surprised if it happens sooner rather than later.
Let's look a little bit about the future for BP. So far, what's your assessment of what Bob Dudley's done in charge?
Well, I think the management changes that he's made seem pretty sensible. I think that they're getting on and being very successful with their disposal program. I mean, that's a point to make in respect of valuation. I mean, they're achieving very good prices for the disposals that they're making, far higher valuations than are being placed on the assets by the market on the assets that BP owns. I think the jury is out, of course, as to what Bob Dudley's big vision is, and we have to wait.
And indeed, on future exploration, at the moment there's a moratorium on deep-sea drilling in the US, and indeed in the UK here we're looking at possibilities for the future of deep-sea drilling. Will that affect BP significantly, and what about their exploration for the future? BP
had set out to be best in class at deepwater drilling. I think they're probably going to have to pause a bit now and think how many of the eggs do they want in that basket. And my guess is that they will reduce their eggs in that basket but not withdraw completely at all.
Tim Guinness, it's a pleasure to have you on. Thank you very much indeed for joining us today.
Thank you.